Dirty dealings, corporate battles, consumer woes. This is Evening 5. The Malaysian Anti-Corruption Commission said that it will continue its investigations into the late Tun Daim Zainuddin, his wife, as well as other family members. While the charge for failing to declare his assets has been dropped, investigations under Section 23 of the MACC Act 2009 and Section 41 of the Anti-Money Laundering, Anti-Terrorism Financing and Proceeds of Unlawful Activities Act 2001 remain ongoing. In a statement, the MACC said that the investigation into the money trail abroad is actively ongoing in collaboration with international agencies. This comes after the court discharged and acquitted Daim on Wednesday as the prosecution decided to drop the case following his death. Daim was initially charged on January 29th this year under Section 36(2) of the MACC Act for failing to comply with a notice to declare his assets. He pleaded not guilty to the charge. Following his passing on November 13th, his widow, Toh Puan Naimah Abdul Khalid, issued a statement asserting that the criminal charge should have gone to a full trial, expressing confidence that Daim would have been exonerated. The MACC noted that the discharge and acquittal were granted under Section 2543 of the Criminal Procedure Code, which allows the public prosecutor to discontinue proceedings at any stage. The discharge, however, does not amount to an acquittal unless directed by the court. Affin Bank on Friday cut some of its key financial expectations for the full year, even as its net profits surge in the third quarter, as the company continues to improve profitability. The company now expects PBT of 750 million for the full year compared to 1 billion as previously budgeted, according to its presentation. Return on equity, meanwhile, will come in at 5% instead of 7%. Net interest margin, a measure of profitability from interest charge on loans after paying returns on deposits, will expand at a slower pace of 1.4% from the initial projection of 1.6%. Affin said that efforts are ongoing to improve NIM through the growth in high-yielding assets, current account, savings account strategies and balance sheet management. Affin kept its target for loan growth at 8% and for gross impaired loan at 1.9%. Affin is betting on the entry of the Sarawak state as a shareholder, which will allow the bank to participate in the state's economic growth. Net profit for the third quarter was 145.8 million, which was 45% higher year-on-year, while net interest income rose 27%. No dividend was declared for the quarter. Affin said that the competition for deposits is expected to persist and intensify towards the end of the year, which may have implications on the overall industry's cost of deposits. The bank expects overall business to remain stable for the remainder of the year. Top Glove Corp has entered into a JV with US glove importer Tronex Asia and Polywell International Trade Co. for the production and distribution of high-density polyethylene gloves. The JV involves Top Quality Glove, a wholly owned subsidiary of Top Glove that focuses on manufacturing and trading gloves, rubber products and cast polyethylene products. Under the agreement, TQG will hold a 60% stake in the JV company TG Meditech, while Tronex and Polywell will each own 20%. Business operations are expected to commence by December 2024. Furthermore, Tronex is engaged in importing and servicing US national and international glove brands for medical and food service industries, while Polywell specializes in manufacturing and trading HDPE gloves and related products. The parties will collectively invest 2.4 million ringgit, with TQG contributing 1.44 million and Tronex and Polywell each providing 480,000 ringgit. TG Meditech will oversee the project, focusing on manufacturing and distributing HDPE gloves to support Top Glove's expansion strategy. Meanwhile, the JV board will comprise 5 members, with 3 nominated by TQG and 1 each from Tronex and Polywell. Top Glove also noted that the JV is a long-term strategic initiative aimed at enhancing its product portfolio and market presence. Offshore oil and gas services firm Bumi Armada saw its third quarter net profit improve by 19% year-on-year to 211.33 million as operating margins expanded with lower costs. Revenue for the quarter edged up 5.2% year-on-year to 551.86 million ringgit. No dividend was declared for the quarter. The future firm vessel order book amounted to 10.2 billion at end September, with optional extensions worth up to 9.5 billion ringgit. In its announcement, Bumi Armada said that the group Group is pursuing new opportunities in targeted markets. However, the company did not provide an update on Friday on the proposed merger with MACC's offshore business. Earlier this month, Bumi Armada had signed a non-binding pact that would be valid for 9 months with MACC to explore the merger. The group also reiterated that it may book non-cash impairments going forward with accounting adjustments. Hong Kong-based energy services firm Unity Group Holdings International said it is planning a secondary listing in Malaysia. Unity Group aims to boost its liquidity and valuation as well as to expand its investor base, it said. The planned listing is also in line with the company's presence in Malaysia and the recent partnership with a bank in the country to support local government projects. Chairman and CEO Mansfield Wong said that it will have further discussions between the group and qualified professionals for this exercise. The company, currently listed on the Hong Kong Stock Exchange, did not provide a timeline or the method of listing. Bursa Malaysia allows secondary listings of foreign companies only on the main market. Unity Group operates in China, Malaysia, Indonesia, United Arab Emirates and South Africa. The company provides energy management services such as lighting and cooling systems, as well as implements solar projects according to its website.